So today we're going to be going over how to properly trade flags. So here's an example, meta March 25th. So first things first, we're not going to be using the 8 EMA. We're going to be using the 20 EMA. So for 30-minute flags, we're going to be using the 10-minute 20 EMA. For 10-minute flags, we're going to be using the 3-minute 20 EMA. And for 3-minute flags, you're going to be using the 1-minute 20 EMA. If you're not comfortable trading 10 and 30-minute flags, do not trade 3-minute flags. You're going to get cooked. All right, so here we go. We get this nice daily setup on meta. It's gapping up over previous day high. So now what we're looking for, we are also above the daily 8. So what we're going to be looking for here, for this 30-minute flag, wait for it to come down and tap the 20 EMA, and then that's your entry right there. And then your stop is below the 20 EMA on the 10-minute. And if you look at the 30-minute, it's beautiful. Absolutely gorgeous price action. Then you're taking trims at high of day right there. Even just that, 2.8 R trade. And then you just ride the 8 EMA until it breaks. And then there's your stop. So of course on a big pop like that, you're taking even more trims. And then once you get that close underneath the 8 EMA, you're getting out. So even at the final exit, 1.7 R, and that's if you have your entry all the way up here. But ideally, as soon as buyers step in, you're entering. And then that brings it up even higher. 4.8 R trade at the exact top. Then if you look at the 30-minute chart, you get a very nice move. Alrighty. So now we're going to go over AMD on April 6th. This is an example of how to not trade a 30-minute flag, because it's not really a flag in the first place. So here we get this nice impulse move, right? It looks good on the 10-minute, but if you go to the 30-minute, it's not really a flag. It's a pre-market high retest, but it doesn't really work. It's not an actual flag, so I'm not gonna. It's a different type of setup. So this wouldn't count as an actual flag. Ideally, you want it to get a nice move up, and then consolidate a bit down to the 20 EMA, and then move. So this is an example of what not to trade. Sure, it's bouncing off the 20 EMA, but price action is not ideal. Alright, and now we got Tesla on the exact same day, and it's a 10-minute flag. So here, if you miss this entry up here, which is already good, you have this. So this looks like a good move. You get this nice move down, consistent price action to the downside, and then it gets bought up. So now you're going to the 3-minute because you think it's going to form a 10-minute flag, and you want to see what the 3-minute 20 EMA is doing. So here, there's your entry. It's holding the 20 EMA, so you're entering down here, and then your stop is just at the top. Because if it pushes down, and then buyers come in and push it back up towards the top of the candle, most of the time, like 80 to 90% of the time, it's not going to work out. And then you're taking trims at low of day, obviously. 2.7 R just from that. And then you're riding the 8 EMA all the way down. And then there you go. And then if you go to the 10-minute, so you're taking trims low day, and then all the way down here, 10.4 R. And then you can re-hit it. Boom, there's part 2. 10-minute flag. Definitely not that ideal, because it's a bearish or bullish engulfing candle, but sellers come off cleanly off of the 20 EMA on the 3-minute. So again, you're entering once it starts wicking off that. Your stop is at the top of the candle, and then you let it go. Take trims near low a day, and then you get stopped out. As soon as you take trims, your first trims at low a day or near low of day, you're bringing your stop to break even. and then it's completely risk-free, and you let your runners run. And if you get stopped out, whatever, you still made money on a little bit of the position, and you re-hit it, and you hit it earlier up here too. All right, so now we're going over meta on the 31st, and this is a good 30-minute flag. Yeah, here we go. So it comes down, you get this nice impulse move off the open, then it comes down, flags out a little bit, and then if you go to the 10-minute, it starts coming up off of the 20 EMA. So there's your entry right there. Entry once it starts getting bought up, and then your stop is just slightly below. Take trims high day, and then ride the 8 EMA on the 10-minute. Target the daily 8 EMA. So you're taking big trims up there. Even more trims on that pop. And then you probably have like 1 or 2 contracts left. And then you get stopped out there once you get under the 10-minute 8. The only reason I'm not managing the 30-minute flag with the 30-minute 8 EMA is because it's just way too long. If you hold it, you're gonna, and it's just not good EV on average. The 10-minute 8 EMA is good to manage on the 30-minute setups. So from your entry point to the absolute top, 11.2 R trade. And then if you wait till the close underneath the 8-minute or the 8 EMA, then it's an 8.6 R trade. But you see how it comes up really cleanly? And also another tip is for these flags, you want price action to be as clean as possible when it's coming down. Like if you see it come down and chop out a bunch down here, it's not really ideal. You want it to come down cleanly and then perfectly tap up off of that. So now we're gonna go to meta on the 26th. And this is a good 10-minute flag. Alright, so here you get this nice impulse move, starts consolidating here. 3-minute, taps off the 20 EMA twice. So you could enter here and then re-hit on here. So let's just say you get in on the second one. Your stop is just the top of the flag, which would be this candle. And then you let it work. Also, with these setups where low of day is very, very close to the entry point, I'm not going to take trims at low of day. It depends how far low of day is if I'm going to take trims. And then there you go. There's your stop out right here. And if you take it from entry point to low day, 6.8 R trade. If you wait to the close above the 8 EMA on the 3-minute, 5.7 R trade up here. But since we're trading it on the 10-minute and it's a 10-minute flag, we're going to be right in the 10-minute 8 EMA. Because the 10-minute 8 EMA is way better. The 3-minute 8 EMA on these kind of setups are going to get you stopped out too early. A good amount of times. Alright, so from entry point all the way, you're going to be targeting this daily pivot at 547 and then leave runners. So if you take it all the way to that target point, it's 12.3 R trade. If you take it all the way to low day, 13.9 R trade. Then if you wait to the 10-minute 80 EMA gets above, then it's a 11.5 R trade. And then you can also re-hit it on here. Look at that. 3-minute 20 EMA is holding nice. Boom. Easy. then your stop would just be at the top. Target this daily pivot I was talking about, 3.9R. And then if you take more trims on the sell off right below it, 5.5R trade. So then we got meta on the 19th. So you get the move down and then it consolidates here a little bit. Also lines up with the pre-market low. So you're looking at the 10-minute. Gets a nice rejection off the 20 EMA. So this is your entry spot. And then your stop is at the top of the flag above the 20 EMA. Then you let it work. And here's another time I'm not going to be taking trims at low of day. Maybe I'll take one, but it's very close to the entry spot, so definitely not a good amount. And then you can re-hit it on the 20 EMA right there if you want to. Really slap price action. So it's a pretty slow grind, and then you're getting stopped out there. So if you take it to low day, 4.6R trade. If you wait till the 20 EMA is closed above, 2.3. But this isn't an ideal trade because really sloppy price action. It could still work. It would just be a lot lighter size since it's not as clean. You always want super clean price action on the flags. And then you see how it doesn't make that nice clean move down. Instead it like is super choppy, even though it does work, kind of. So whenever price action is sloppy like this, it's not as good. So now we got meta on the 4th. And then this is a 10-minute flag. So here we get this impulse move up, and then it comes down to the... And this is the sharp flag. Like, it doesn't slowly consolidate down like that. It comes down really fast. But it doesn't matter because buyers come up off the 20 EMA and the 3-minute. And price action's super clean too. Price action is really clean on this one. So your entry is once it starts getting bought up off the 20 EMA. Stop is below the 20 EMA. Take trims at high day. 3.9. And then you're just getting stopped out on the rest. Alright. And now a good example of a bad flag to take. You look here. For one, this is a bad trade because we're in between all the daily EMAs, so there's a lot of bouncing around here. But if you go here, look at the 3-minute, and it starts trading underneath. You also see how sloppy this price action is. You could literally scan this at the supermarket if you want to. And then, because it's not fading down, it's not getting that impulse move and then a slow fade down. It's not getting that impulse move and then a slow fade down like that. All it's doing is just coming up, stays flat up here, and then drops down really fast. Price action is always the most important thing when you're trading these. You took that one? Yeah. Alright, now we got Amazon on the 5th. This was a beautiful trade. Or the 4th, sorry. And this is a 30-minute flag. Hit these for 200%. So we get that nice move up. And this is also a gap and go setup. I took this one. And then you get that nice price action. Super clean consolidation down to the 20 EMA on the 10-minute. So there's your entry right there. And then your stop is, again, just below the 20 EMA. Then you let it work. These can be slow grinders sometimes. And then by now, you're up like 100%. And then up here, it's 200%. But yeah, you guys see how the price action's super clean. Nice consolidation down to the 20 EMA. And then you also get the consolidation on the 30-minute. Now we got XOM on the 6th. Now this is a weird daily setup. Really, once we get this nice push up, and then we're looking for the 30-minute flag, you drop down to the 10-minute, comes up off nicely. It's a 4-cent difference. Not even 4 cents, it's a 3-cent difference. So once buyers actually start coming off near that, there's your entry, and then your stop would ideally be maybe below the 200 EMA on the 10-minute. And then you get that super nice move to the daily 8. Alright, now we got Google on the 1st. Alright, so Google on the 1st. We hit this off the open too for 400%. So after you hit it off the open, comes down, get this nice 3-minute flag. It's a little risky because we're rejecting the daily 20 up here, so it would be lighter size. And then you get that 1-minute 20 EMA tap, then you enter. And if you look here on the 3-minute, super clean price action. 1 minute's never gonna have clean price action, so I don't really care about what it looks like on the 1 minute as long as it comes up off the 20 EMA. Then take it to high day, big trims, and then you're right in the 10-minute 8, and then taking big trims on that push, and then you're getting stopped out below. So from entry point to high day, 5-hour trade, super nice. So now we got Apple, and this is an example of what not to take. So we do get this nice impulse move up off the open, but this key level 260, 261, a lot of taps. It's also the top of this range right here, up here. So we're rejecting that, so that makes it risky. And then if you look here, bearish engulfing on the 10-minute, tweezer top on the 30-minute, price action really bad. And then if you look at the 30-minute as well, it's not really getting a clean bounce up off of that. Price action is just really gross. You see the difference, how the really good flags have clean price action, and then the flags that usually don't work out have bad price action? It's because price action matters more than anything else. So now we got AVGO on March 9th. Oh yeah, I guess I'll just go over it on this one. So this isn't super clean price action, but it's not rejecting anything. And then we do get nice buyers off of the 20 EMA. So right here, you're entering. And then you could re-hit that because the EMA is still holding, the 20 EMA is still holding. And then it just doesn't work. But see how the price action isn't that great, and then it doesn't get a nice secondary push. This price action right here is not ideal at all. Alrighty, now we got Intel on the 30th. So this right here, if you go to the 3-minute, we didn't get the 3-minute 20 EMA tap on this one, but it is a previous daily retest, so it's good. But since we're talking about flags and using the 20 EMA, I'm not gonna use that as an example. But it is a previous daily retest, and it's a good trade. But so here on the second nice flag, yeah, I have my 80 EMA on. We come up, sellers come up off the 20 EMA, then there's your entry. Once the low of that first candle breaks, then your stop is on top of it. Take trims low a day right there, and then you're right in the 10-minute EMA, 10-minute 8 EMA. And then there's your stop. So 5.9 R trade at the bottom. Then once you get that push above the 10-minute 8 EMA, 3.7 R trade. Now we got Intel on January 1st. Sorry, January 28th. So right here, we have a nice daily setup. It's gapping up over the EMAs. And this is just an absolutely gorgeous trade. Like it doesn't really get cleaner than that. You get that nice candle up top, which is the pull. Then it consolidates down really nicely. Clean price action, no weird choppiness going on, just straight fading down to the 20 EMA on the 3-minute. And then once you get those buyers up off of it, that's your entry. Then your stop is just below the 20 EMA. So you're risking like 10 to 15% on these trades. And that's if you get a bad fill. And then you're right in the 10-minute 8 EMA the whole way up. So there's your first trim at high day. You can take safety trims once you get these little pops up here, just for safety, because price action is kind of weak. It's not getting a nice push up, but the price action coming into the flag was very good. And then you're taking big trims at high day, since high day is pretty far from the entry. More trims on that pop right there, and then you're getting stopped. So from entry point to high day is 10 R trade, and then till the final exit, 6.4 R trade. Tesla on the 11th. And then this is an example of bad price action. So here we're looking for the 10-minute flag, but we don't want to take it because if you look at the price action, it's disgusting. Yeah, that candle right there, you don't want to see that. And then if you look at the 3-minute, it's not even trading. It's trading below the 20 EMA. Your actual entry, if you wanted to take it, would be right here off this 20 EMA tap and then take it up. But because this price action isn't clean, that doesn't work out. And now it's trading below 20 EMA and it doesn't work. Now we got Apple on the 17th. And this is a bad flag. For number 2. So here we get that push up. Then if you go to the 3-minute, it's not trading. It's trading underneath the 20 EMA, so it's not ideal at all. And sure, it works out a little bit, like right there, but doesn't get continuation. The only reason this is a good trade is because it's a previous day high retest and the 10-minute 8 EMA at the same time. But it's still not ideal because the 3-minute is trading under the 20 EMA. So yeah, it works out a little bit, but it's not ideal at all. You always want it to come up off the 20 EMA. Yeah, once it breaks the high of the previous 3-minute candle. Unless it's like coming down, taps at EMA, and there's like 2 minutes left and it starts getting bought up, then you want to enter that. But if it's closing down here and then you get buyers up off of the EMA, it's honestly just when the buyers come up off of it and where the previous candle's high is. Like if the previous candle's high is right here in this spot, then you're taking it once that breaks. But if the previous candle's high is up here, you're not gonna wait for it to push all the way up there and then increase your risk. It's a nuance kind of thing. It just really depends on where the high of the previous candle is. All right, and now Apple on February 25th. And then this is a good 10-minute flag. So you get that nice push up, comes down, holds the 20 EMA, This is a good example of what I was just talking about. How the previous high candle is up here, but we get buyers coming up off of the 20 EMA. So you're not gonna wait till all the way up here to enter that. You're just gonna get your entry once buyers come in, set your stop below, and then let it go. Take trims at high day. And then you're right in the 10-minute 80 EMA, waiting for that close underneath. So from entry point to high day, 4.8. Then once you get that close underneath the 80 EMA, when there's clear selling pressure underneath the EMA, that's when you're exiting. So it would be like right here, 1.8 at the end. Now we got Google for the 31st. And this is a bad 10-minute flag. So right here, comes down, taps the EMA, but it's trading underneath the 3-minute 20, so it's not ideal. So for these kind of trades, I'm not taking it unless it's bouncing off of the 20 EMA nicely. But it's trading underneath when the 80 EMA tap happens, so I'm not getting in. So what we're gonna do instead is we see this base forming, but we're not gonna be entering on any EMA taps because this price action is trading underneath the 20 EMA every time on the 3-minute. So we're gonna wait for this trendline break, and then because risk would be just the bottom of the entry candle all the way down here, you'd be sizing less just because the risk is increased. So whenever you see price action not trading above the 20 EMA on the 3-minute for 10-minute flags, but you see a base forming, and then it's still not trading underneath the, or trading above the 20 EMA on the 3-minute, you're gonna wait for a trendline break, and then that would be your entry. Yeah, it also applies on the 10-minute for 30-minute flags. It applies on the 10-minute 20 EMA. If it's trading underneath, most of the time it doesn't work out. And then you get sloppy price action. So now we got Intel on the 8th. And then this is a good 30-minute flag. Absolutely beautiful. Okay, so we get that nice impulse move up. And then this is a very, very sharp flag. And up here is a reversal candle, right? So it's not ideal. But the 10-minute has pretty nice price action. You're getting bought up off the 20 EMA. There's a clear rejection there. Gets bought up even more, so that's your entry. And then your stop is just at the bottom of the candle. And then you ride it up. Take trims high a day right there. And you just ride the 10-minute 8 until there's clear selling pressure, like right there. Clear selling pressure underneath. So from entry point to up here, it's a 7R trade. Then once you get that selling pressure underneath the 10-minute 80 EMA, you're getting out. 5.5R trade. And that's if you have your risk all the way down here below this candle. But if you just put it below the 20 EMA, your risk is less, and then you get a 10.5R trade. My first trim is always at high or low of day when trading flags, if it's not too close. Like if high of day is up here and I'm entering down here, I'm not gonna take trims at 10%. It's stupid. Yeah, if price action isn't moving ideal, then you can take safety trims. But like on moves like this where price action is super clean, you don't want to be taking safety trims at 25%. Wait till high day, take a few trims, and then let it ride. So now we got AMD on the 25th. Gorgeous daily setup too. So this is a good example of a 10-minute flag. We were milking this thing on stream when it happened. So you get that gap and go setup. Then you're taking big trims up here. Yeah, World Tree got this one too, huh? And then See that 20 EMA tap? When price action is very, very nice, very clean, and you get those very nice rejections like that, just absolutely perfect. So you're entering on that. I was sized big on this trade. Then you're taking big trims at high day. Because this is a key daily pivot spot, it's at the top of this range. So you're going to be taking big trims there since it's a high chance of rejection. But if it wasn't a key pivot spot right there, then high day would be lighter trims. Maybe like a quarter or a fifth of your position. Maybe a few more trims on that pop. And then there was clear selling pressure under there, so I would have got out. Since we are at, since we're rejecting that key level on the daily chart. But just from here to here, to high day, 2.9 hour trade. If your stop is at the bottom of the candle, 3.4. And now we're gonna go over Microsoft. Gabe took this one because I don't know if he's in here. Is Gabe in here? No, he's not, but he took this. So we got a nice 3-minute flag on the 9th. So same concept applies. You get that nice impulse move, consolidation up to the 80 EMA. Go to the 1 minute for 3-minute flags, rejecting the 20 EMA pretty cleanly. So there's your entry right there. Stop is above the 20 EMA. Take trims at low day. And then you're riding the 3-minute 8. Then obviously down here, once price action starts getting weird, super choppy, you're taking a lot more off. 6.4 to low day. Yeah, Zem, exactly. 1 minute for 3-minute flags, 3 minute for 10-minute flags, 10 minute for 30-minute flags. Now we got yesterday. We were hitting everything yesterday. I was just in a flow state, bro. So we got Intel, nice 30-minute flag. Hit this one for 100%. Comes down, you get that nice impulse move up top. It's just peaking its head above the pre-market high, so it's not super clean, but we tapped 30-minute 8 perfectly, get above the pre-market high, so it's now both a pre-market high retest, a key daily level retest, and an 80 EMA retest on the 30-minute. And if you look at the 10-minute, comes up really, really nice off the 20. So your entry is right there. I got it in a little bit early because it looks super nice. And then stop is just below the key daily level here. And then it was a slow grind. Took a long time for it to play out, but eventually got to 100% on this pop. I had a limit order for exactly 100%. And it got it to the T. So if it hits nice on the 30, but below the 20 on the 10, you wouldn't have taken it there? No. Because from my back testing, most of the time when it's trading underneath the 20 EMA on the lower time frame, it doesn't have a good continuation. And then we also got Nvidia, little 3-minute flag. I missed my entry on this one because it was too high by the time I actually was trying to enter. So you go to the 1 minute. Boom, there's your entry. Stop is at the bottom of the flag. And then you ride the 3-minute 8. So from there to up here, it was like 400%, which is nuts. And then you're getting stopped out once there's selling pressure underneath. Or you could do CBC once you get the nice impulse move. So if you do CBC on the 3-minute, your stop would be right here, 6.8R. And then we got Amazon, This was super nice. So the 10-minute weird price action, so it's not ideal, but we get buyers off the 20 EMA on the 3-minute, and the 3-minute actually has nice price action because it has that impulse move coming down to the 20 EMA, and then you get that pop. So your entry is right there, stop below the candle, then you let it go. This one went 180%. And then you're taking trims high day right here. Then up here, you're taking even more trims on. Every single time you see a fat candle like that, where it has a really nice pop, you want to be taking trims. Because you get that IV spike with your option contracts. I'm going to go into this another time, like how options are priced and how the IV affects it. But whenever you get these super nice pops, and this is why off the open, we be hitting like 3 to 700% off the open, because you get that IV spike when it's actually working out. So that IV spikes on every single one of these really nice green candles. That's why you want to take big trims. I don't know about big, it depends on where you're at on the chart. But when you get those nice pops, you want to take something off. And then clear selling pressure underneath the 20 EMA here, or the 10-minute. Get what? The 3-minute 8. Clear selling pressure, so I'm getting out. 2.7 our trade up there. Final exit was like 70%. 4.2 up here. But yeah, that's all I got. Hopefully this will help you guys trade flags better and know what to look for. Yeah, I'm gonna end the recording here and then answer any questions. That's a long class, dude. 50 minutes. Sheesh.